Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, first of all let's start with the risk disclaimer and just remind you all that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Also remind you there's a risk of loss in trading and investing. All professional traders know that losses can and will and do happen. I'll repeat that. Losses can and will and do happen. The trick is keeping the losses small. Also remind you that all trade decisions are your own responsibility. Right, in today's MTPredictor video I'd like to look at how to use the higher time frame charts and particularly our decision point areas for larger degree support and resistance. There's some very good examples on the USE minis yesterday, which was actually Friday, the 7th of April. Now remember what I have talked about in previous videos, in that the markets go in cycles. It's called the cyclical nature of trading, where at least 50% of the time, if not slightly more, the markets are in an unclear pattern. In other words, it's not obvious on the charts what's going on, and when that happens you should stand aside or look to another time frame or another market. But when the picture's clear and everything comes together quite nicely, which it will do about half the time, within that you can then make trade decisions. And that's what I want to show you today, particularly as the larger time frame decision points, support and resistance zones, did a very good job on Friday. So how do we do these? So the larger time frame, or the higher time frame, is normally a time frame between 3 and 5 time frames higher than you're trading off. So on the ES here, I'm looking at a 3-minute chart, so the higher time frame would be the 15-minute chart. If you're, say, trading 15-minute Forex, the higher time frame would be the hourly chart. If you're trading daily, say daily stocks, the higher time frame would be the weekly. So how do we do these? Well, let's use our training mode. Go back to just before yesterday started, or yesterday I mean Friday started, and you see we had a low pivot here. Let's move forward a bit, and you can see the market went up just after the open and made a high pivot here. This is on the 15-minute chart. So how do we get a potential future support zone? We go back to the last swing pivot, we right mouse click over the pivot, then we select decision point, and as you can see it's on the chart there in advance. So when the market was up here at 54.75, after the first 15 minutes of the day, we had this support zone down here. So let's see what the market did as it started to move forward. It came down and, as you can see, hit that support zone beautifully. We then go forward, you can see it then went straight back up again, and that support zone, basically, as we'll see later, now the low of the day. So how do we now get a potential resistance zone? Exactly the same, but in opposite. Go back to the last swing pivot high. You can see it here. It is, because we've now had a pivot connected down into the low. Again, we right mouse click, do decision point. Again, these are on the chart in advance. That's the point I want to stress, and these are leading indicators. They're leading levels of support and resistance, so they prepare you in advance before the market even gets there. So when the market again was down here around the 54 level, 23.54, that would be in a resistance area. Let's see what the market did. It went down a bit, messed around, started to rally back up, hit that resistance zone. You can see there it is. And if I turn training mode off, you can see that nailed the very high of the day. So on the ES, we managed to nail the low of the day and the high of the day with our support and resistance zones that are on the chart in advance. Let's go down to the 3-minute chart and see how they look like on the 3-minute chart. And here you can see they kept on the chart for you. So there you can see that. Look at that. That 15-minute support zone nailed the low of the day. That 15-minute resistance zone nailed the high of the day. So the question being is, how important would these levels be to you in your own trading, knowing in advance areas where markets were likely to make reversals? And as you can see here on the ES, we nailed the low of the day and nailed the high of the day. If we now look at our MTP trend indicator, this actually works off the major pivots on the chart. So if I put the major pivots on, which I have there, here's our major pivots in blue. So if I now, perhaps I'll take that one off, you can see here's the last major pivot swing low. If I now put the DP on, you can see it tells you it's a major pivot. So our MTP trend works off these major pivot swings. So as the market came down, it then turned grey or black to show you it was an area of potential reversal. The market then rallied back up. Can you see here the trend indicator then turned blue? It turned blue, telling you the larger trend was up into when, if I put the cursor on, up into when it changed grey here, which is when it hit the higher time frame resistance zone. It then was grey as it started to reverse back down, and then was red as the market was coming down, and that would help you avoid these potential buy setups because they were against what would otherwise be a large degree downtrend. The best trade setup of the day, if I just take everything off, take those pivots off again just to clear the chart up. The best trade setup on the day, in fact the only valid trade setup of the day, was this VS sell. This is a volume spike sell. Volume spikes where we have an unusually high volume on a wide range bar that goes beyond a prior pivot high. It then reverses, but more importantly, if it reverses at our DP support and resistance zones, which you can see is exactly what it did there. Our MTP trend was black, therefore indicating a potential reversal. So let's right mouse click, do our analysis, and there's our short trade. Obviously it didn't get to the target before the market closed, so you'd have come out on close for a nice 1.9R profit, so a very good trade there indeed. But the main thing I really wanted to show you was on the higher time frame chart how these DP levels would have been on the chart in advance before the market got to these particular levels. And if I go to the 3-minute chart, you can see that's what it did. It basically nailed the low of the day for you on the ES and the high of the day for you on the ES. Let's have a look at the NQ. I'll just take those off because you can see that what a good job they did already. I'll go to the 15-minute chart and show you where I put these on. Again, there's the last pivot low. Remember, this would have been on the chart in advance. And as you can see, the market came down. That's where the low of the day was. Right mouse click over this pivot. So as the market was rallying back up again, this would have been the resistance area. And as you can see, that nailed the high of the day. If I go down to the 3-minute chart, again, look at that. Absolutely perfectly caught the low of the day for you. Caught the high of the day brilliantly. Again, the indication that the large trend was up was by our MTP trend indicator being blue. Therefore, these particular sell setups here would have been avoided because the MTP trend was blue. Again, the best trade of the day was our VS or volume spike sell setup at the higher time frame resistance when our MTP trend was black. Let's place the analysis on. Just like the ES, that nailed the high of the day, and the market then declined off there as well. The YM wasn't quite so clear. The YM, basically, if I went to the 15-minute chart, didn't make its highs and lows at the DPs. It basically made a low at the previous day's low. I'll put the high and low and close on for the previous day. So it basically made a double bottom. Then as the market went up into this area here, it made a TS1 sell, which was at the same time that the ES was making its high. So there's no wonder that the market rolled over. Basically the ES, being the larger indices, pulled the YM down. So this was a good example on here. The picture wasn't quite so clear. In other words, on the ES we had the markets working perfectly with the reversals coming off the levels beautifully. NQ absolutely beautifully, and the YM wasn't quite so clear. So the trade setups in the YM were probably not the ones to consider because the picture wasn't quite so clear. And that's a good example of the cyclical nature of trading, and that if you're looking to trade markets, there's no point trying to struggle with markets where the picture's not clear. I mean, why do it? It just makes no sense at all. The best thing to do is to work when you get a nice, clear, clean picture. And on Friday, that was on the NQ. Here you can see we nailed the very low of the day, nailed the very high of the day, and obviously got a nice sell set up as off the bar of the very high of the day, and exactly the same on the ES. Now these DP levels can obviously be used in your own trading. At MTPredictor we encourage you to do your own analysis as well, so we don't force people to just use our MTPredictor trade setups. So the question being is that if you're doing your own trading with another system or another approach or your own approach, how valuable to you would it have been to be able to have these levels on the chart in advance that, as you can see, nailed the very low of the day and nailed the very high of the day for you. So MTPredictor's DPs on our hard time frame charts did an absolutely excellent job of nailing the highs and lows for you last Friday.